Welcome back to the Daily Crypto Roundup. Today is one of those rare days where the entire tone of the market shifts. Not enough to call it a reversal, not enough to declare a trend change, but enough to say that the free fall has finally slowed. After nearly 6 weeks of heavy selling, brutal liquidations, outflows, short squeezes, panic, and headlines screaming crypto winter, we're finally seeing something different. Stabilisation. Not excitement, not euphoria, just the market taking a breath again. And believe it or not, that breath matters more than any pump. Because bottoms don't begin with green candles, they begin with exhaustion. Before we go deep into the stories, make sure you're following the show on Spotify. And if you're enjoying these updates, drop a 5-star rating. It helps massively, and it tells the algorithm that you want more crypto content like this. All right. Let's start with the top of the market and set the scene. Bitcoin has clawed its way back into the low 90,000s, sitting roughly around $93,000, up a very small amount on the day, comfortably under 1%. Ethereum is doing something similar, holding around the 3,150 mark, up about 0.5% after dipping hard yesterday. XRP's hanging out in the low $2.20s. BNB's hovering near $900. Solana's nudged back into the 140s with a modest bounce. Cardano's still around 48 cents. Dogecoin is sitting at 15 cents. Tron is steady just under 30 cents. Litecoin is around $95. And Bitcoin Cash is just above the $500 mark. Nothing dramatic, nothing explosive. But importantly, nothing falling apart either. And right now, that's the entire story. The market has finally stopped bleeding. Let's get into why. The first big shift is coming out of Washington. The SEC has just removed crypto completely from its 2026 exam priorities. The first time in years that digital assets haven't been flagged as a special area of scrutiny. On paper it might sound small, but symbolically, it's enormous. This is the same SEC that spent years going after exchanges, brokers, and token issuers. The same SEC that was building entire teams dedicated to crypto enforcement. And now, under the new administration, that entire category has quietly vanished. One regulatory analyst summed it up in one sentence. The SEC is no longer treating crypto like a threat. It's treating it like a normal part of the market. And that changes the psychology instantly. Not bullish tomorrow, but bullish for how institutions view the long-term regulatory climate. The second big story is Ethereum, because ETH just had one of the most textbook technical moments we've seen in months. It flushed into that $3,000 region, even dipped briefly into the high 2,000s depending on where you look. And that's where all the historical demand zones sit. Analysts have been pointing out for weeks that the 3,000 to 3,100 zone is where ETH builds bases. It's like the floorboards of the entire structure. And when ETH hit that level with extreme fear at its back, buyers didn't hesitate. One technical strategist put it really nicely. Nothing has changed about Ethereum's fundamentals, but the price needed to reconnect with its structure. And that's exactly what it did. The RSI even held while price dropped, which is a classic bullish divergence. Again, this doesn't mean reversal, but it explains why ETH stopped bleeding exactly where it did. Now let's talk about Bitcoin. Because BTC gave us something pretty dramatic. A proper capitulation wick. That drop under 90,000 wasn't just a breakdown. It was emotional. You could feel the panic. You could feel the liquidity disappearing. You could see longs getting wiped out across every exchange. But here's the important part. Bitcoin didn't stay there. Buyers stepped in aggressively around the 89 to 90 zone and pushed it straight back into the low 90,000s. And it's held that level ever since. That's not a moonshot. That's not bullish. But it is classic bottoming behavior. The flush, the reclaim, the slow grind sideways. Tom Lee at Fundstrat said earlier today, Bitcoin bottoms are cleaner than people think. You get the flush, you get the reclaim, and then you get boredom. And boredom is exactly what you want if you're building a base. But that bounce didn't come out of nowhere. It came after one of the biggest leverage washes we've seen in months. Billions in liquidations. Over-leveraged long positions torched. Funding flipping negative, open interest collapsing, weak hands gone. And this is where the market finally resets. Marcus Thielen at 10x Research weighed in by saying, "You cannot build an uptrend on top of bad leverage. It has to burn out first." That's exactly what the market has done this week. Not by choice, by force. And let's be fair, nobody likes these liquidation events. They hurt. They wipe people out. They feel chaotic. But they're necessary. Because without clearing the junk positions, the market can't stabilize. It's like clearing dead branches after a storm. It's ugly, but it makes room for new growth. And right now, leverage is the lowest it's been in weeks. Open interest is sane again. Funding rates are normal. And the market is breathing. The entire structure is healthier today than it was 7 days ago, even if prices are lower. We're going to take a short break for today's sponsor. Stay with us. We'll be back in just a moment.
Avoiding your unfinished home projects because you're not sure where to start? Thumbtack knows homes, so you don't have to. Don't know the difference between matte paint finish and satin? Or what that clunking sound from your dryer is? With Thumbtack, you don't have to be a home pro. You just have to hire one. You can hire top-rated pros, see price estimates, and read reviews all on the app. Download Thumbtack today.
What can 160 years of experience teach you about the future? When it comes to protecting what matters, Pacific Life provides life insurance, retirement income, and employee benefits for people and businesses building a more confident tomorrow. Strategies rooted in strength and backed by experience. Ask a financial professional how Pacific Life can help you today. Pacific Life Insurance Company, Omaha, Nebraska, and in New York. Pacific Life and Annuity, Phoenix, Arizona.
Okay, let's get back to where we left off. Something really interesting is happening in traditional markets too. Crypto stocks, the public companies that act as a kind of proxy for institutional appetite, have bounced. Coinbase is green. Miners are green. A few of the Bitcoin-exposed tech names have recovered slightly. Remember, these stocks usually move after crypto, not before. When they start turning green while Bitcoin is still shaky, it often signals that institutional investors are sniffing around. Not apes, not traders, not leverage hunters, but actual funds. And then we have altcoins, the place everyone goes to test the temperature of the market. And here's the thing. Even with Bitcoin down massively from its highs and the entire crypto market shedding over $1 trillion in 6 weeks, some altcoins are starting to show signs of life. Not meme coins, not low-cap gambles, but actual layer ones, infrastructure tokens, and projects with real ecosystems. That's what you see near local bottoms. Not hype, not mania, just selective strength in real assets. It's rotation. Slow, subtle, but noticeable. And importantly, it's not people abandoning Bitcoin. It's people staying in crypto, but reallocating inside crypto. Now let's zoom out a bit, because the bigger story today isn't the bounce itself, it's what the bounce represents. For the last month and a half, the market has been in a full fear cycle. $1 trillion wiped out. Bitcoin falling 25 to 30% from the highs. Ethereum losing major support levels, altcoins getting obliterated, and sentiment going from greed to extreme fear in a matter of days. But here's the key thing. Panic doesn't last forever. Markets cannot stay in full fear mode for long. Eventually, they run out of sellers. Eventually, the forced liquidations end. Eventually, the people who were going to panic sell have already panic sold. And that's when stabilization begins. There's another macro layer here too. The Federal Reserve hasn't pivoted, but it also hasn't tightened. Rate cuts are still expected, maybe slower than the market hoped, but they're coming. And risk assets don't need cuts to stabilize. They just need certainty. They need the panic around rates to cool off. They need the bond market to settle. And that's what we're seeing. Treasury yields have stopped spiking. Inflation expectations haven't changed. And although the Fed hasn't delivered anything bullish, it hasn't delivered anything bearish either. And in a fragile market, not bearish can be enough for prices to find a floor. Long-term holders also play a huge part in this story. Even during the drop under 90,000, long-term Bitcoin wallets refused to sell. There was almost no meaningful outflow from the strongest hands in the network. That's rare. Usually during fear events, even long-term holders wobble. But this time, they didn't. And whenever long-term holders sit still, it creates supply pressure that stabilizes price. It's like having an invisible wall under the market. There's also the ETF angle. And yes, I know you don't want to do ETF-heavy stories every day, and I agree. But this part matters. Outflows have slowed dramatically. They haven't reversed yet, but the bleeding isn't accelerating anymore. A couple of institutional desks even suggested today that once volatility cools, the funds will see inflows again. As James Butterfill at CoinShares noted this morning, ETF flows aren't pro-Bitcoin or anti-Bitcoin, they're pro-stability. When the market stops panicking, the flows normalize. So the real question becomes, is this the start of a recovery? And the answer is, not yet. Not officially. But is this the start of a base-building phase? Very possibly. And you need a base before you get a reversal. Every cycle has this moment. Every sell-off has this pause. The panic stops. The noise quiets, prices flatten, and everyone starts asking, is this it? And usually the answer is, it's the beginning of it. Psychologically, the market feels different today. Not bullish, just calmer. And calm after fear is often more bullish than bullishness itself, because it means people aren't scared anymore. They're watching, they're curious, they're paying attention. That's when smart money starts moving. As always, thank you for listening to the Daily Crypto Roundup. Make sure you're following the show on Spotify, drop a 5-star rating if you're enjoying it, and feel free to share your thoughts. The market's been brutal for weeks now, but for the first time in a long time, we're seeing signs of structure returning. And sometimes that's all you need for momentum to start rebuilding. Thanks for tuning in, and as always, we will see you at the top.